This just crossed the Bloomberg a few seconds ago, and as Scarlett said, you had a beat on the revenue, and you met the expectations on the earnings per share. Start with the revenue. How much of that, and because there was really growth year over year, how much of that is the F-Series, the Ford pickup?
Well, F-Series certainly was important because it grew 9% last year. So we just keep going from strength to strength with the F-Series, both F-150 and Super Duty. And we also had higher volume in other parts of our business around the world. So it was a really good story on the top line. But as you can see from the pre-tax results, we were down. And that just indicates for us the work that we have underway on fitness and how important it is that we bring that home.
You're an honest man, Bob Shanks, because my next question was going to be, why didn't more of the top line flow to the bottom line? For any of us who've managed these income statements, you always look at how efficient are you in top line growth dropping down to the bottom line. It didn't happen for Ford right now. Why?
Well, in the quarter and also for the full year, it was largely explained by the fact that we had headwinds on both commodities and exchange. That's not an excuse, because I think if we were a fitter business, while that would still be there, the margins would be at levels that I think we'd all be much happier with. But in fact, that was the issue that we had in the full year and also in the quarter. But incrementally in the quarter, we had some rising warranty costs in both North America and Europe that were related to recalls on a year-over-year basis.
So there's been a lot of talk about the cost of commodities, which have been going up, but they've been going up for everyone, as well as FX. Why is it what appears to be the case that Ford is more affected by this than other auto manufacturers?
Well, simply what we're reporting is what's happening in terms of market prices. So I don't think that we're affected in any particularly way that's different than others, other than the fact that our footprint in terms of exchange exposures might be a little bit different. But about 2/3 of our commodities are both steel and aluminum, with steel being the greatest portion of that. So I think everyone's affected in the same way. I think the real opportunity, David, is what I mentioned, which is looking at that and looking at the effect and then seeing what margin you're generating in your business. To us, that says, guys, you got to move urgently and swiftly to address the fitness of the business. And in fact, we are doing that and seeing a lot of progress from the teams that are working on what we call our fitness redesign efforts.
Yeah, this is with your relatively new CEO, Jim Hackett, who really has been talking about fitness quite a bit. Take us into that, though, just a minute, because your profit margins in North America far exceed anything you're doing outside. Do you plan to get the others up, or is the North American have to go even higher to drag up the rest behind it?
No, clearly we have to get the operations outside of North America earning at least their cost of capital, if not more, and it should be more. They actually lost money collectively in both the fourth quarter and the full year, and in both periods they were down on a year-over-year basis. A lot of that driven by Europe. We had guided that we'd have an impact of about $600 million in Europe year-over-year related to Brexit. That, in fact, did happen, but incremental to that, we had the effects that I just mentioned in terms of some higher warranty cost, and then we also saw some higher commodity costs that affected them too. But there's no question that those parts of the business have to do far, far better, and we're working on that around strategy as well as execution. But even North America at an 8% margin should be doing better.
So as you look at this fitness campaign, if I can call it that, how far along are you in it? And if the way you're judging success is by profit margin, when will investors start to see some real returns?
Well, we're well into the effort. It's covering 6 initiatives, and we have 6 areas, and we have quite a number of initiatives that are underway. A lot of progress. We're getting reports at the senior level frequently, and I have to tell you that the progress we're making is really exciting to me as a CFO, because I'm seeing some really big material numbers that the team are uncovering in terms of their efforts as they monetize that. I think that we'll start to see the impact hit the bottom line in 2019, and then progressively increase pretty dramatically by the time you get to the end of our business planning period, which is 5 years out. And they still have more work to do. So I'm really excited to see what more they can come up with. But it's a really material effect that I think we'll be able to bring to the bottom line.